Well, as we enter the holiday, 'tis the season to be jolly. In the real estate market, we might not feeling so jolly. Mr. Jerome Powell, aka being labeled as the Grinch for this Christmas, is bringing a lot of people in the mortgage business and the real estate business feeling like a box or a lump of coal. And wait, hold on. Before we just jump in and we start pointing fingers and blaming Jerome Powell, we have to take a step back, bring up the hood of the car, look under the sheets, right? And figure out what is going on. How do we get here? As we start to make progress, look, let's be honest. We're making progress on inflation. We're making progress on rates. But one thing that's clear is as the Feds have cut interest rates 100 basis points. Historically, time and time after time as they cut rates, long-term rates have come down. But as I sit here and shoot this video today, why I'm saying Mr. Jerome Powell seems to be giving us a lump of coal for Christmas is because, yes, he gave us a quarter rate point cut, but as you, the consumers, you, the audience, as you, the American people, you, the person that wants to buy real estate, refi real estate, maybe invest in real estate, is slowly, and at the other point, quickly understanding that just because they lower one rate does not mean that all rates fall. And historically speaking, as they cut rates, rates have fallen. And here I sit here reading my notes to make this video, and we're all dealing with the same issue is, why are long-term interest rates not going down? The data is going down. Originally, Mr. Powell said, hey, if inflation comes down, interest rates will come down. They have, but the long-term are not. If the job market cracks and gets worse, interest rates will come down. The short-term have come down, the long-term have gone up. If we feel the consumer is getting choked, slowing down, the economy is slowing down, interest rates should come down. The economy, is this slowing down? I don't know. Everybody seems to say it's really good, but when I go out there and talk to small business owners, restaurant owners, retail, and the story goes on, I'm not hearing that. I'm hearing people saying it's still a ripoff to go out and eat. It's expensive to travel. It's expensive to buy milk and eggs. It's expensive to fill up my car with gas. Insurance is insane. Housing's slow. It's unaffordable. These interest rates are killing me. So at the end of the day, it's not adding up. It's not making much sense. So you, the person that might be watching this video, hey, maybe you're just watching to say, hey, I already own a home. I just want to see what this is all about. What do you mean, Mr. Powell's Grinch? Because how does this matter to you? It really does matter. Because Mr. Powell and the Feds that have all this power and all this control, which they do, if they say something, if they act a certain way, if they look a certain way, if they talk a certain way, it changes markets. It disrupts markets. It affects your and my wallet. It could affect your job. It could affect your industry. It could affect your business. It could affect how much you're going to pay for a house, how much you get paid for investment property, if you can even buy a house or buy an investment property. These are all the things, see, that everybody's thinking about. Like, hey, I just want to buy a deal. I just want to refinance my house. I want to buy an investment property. I want to refinance my investment properties. I want to pull cash out. I want to be more active. I want to get out there and build and grow my real estate portfolio. But how can I do that when these interest rates just keep sitting at a level that just does not work? You can't have interest rates at 2-3% and all of a sudden jack up to 7-8%. Now we're sitting around the 6s and the 7s. We got to make up our mind, people. We can't have a Fed that says, hey, we're going to follow inflation. Inflation's down. Now we're going to follow something else. So in this video, I want to dive into the data, some of the data, as we look ahead. But there's also some things that could change the data. There's also some things that are really, really starting to affect what's going to happen out there. We just saw it as I shoot this video this last weekend. We saw the first signs of DOGE, Department of Government Efficiency. We saw it. We saw it come in and we saw what's going to happen. We noticed that, hey, we're not just going to pass 1,500 paid bills anymore. We noticed that we're going to start requiring more transparency. The American people, that's what they voted for. More transparency. If the federal government was not spending the money, they were. The money that we don't have, the money that you and I, they just keep racking it up. If you take $36 trillion divided by every American person, we all owe over $100,000 to pay that off. You might have been paying your fair share of taxes. You might be a good citizen. You're like, this is insane. And we're all getting affected. So let's dive in to see how the Grinch stole Christmas, but how the market's going to fight back. How the new administration could possibly fight back. How we're going to get inflation down more. What things can change in 2025, which is right around the corner, and moving forward to help get interest rates down, to help get more inventory in real estate, to help real estate become great again. we have never met. My name is Kenny Simpson. I'm a mortgage broker by choice. I focus on helping clients buy and refinance 1 to 4 unit properties, whether you're buying your primary or second home investment property, your 10th investment property, maybe your 20th, maybe you need to refi, maybe you just need somebody to talk to about your current situation, maybe you're having problems because your bank denied you, whatever it is. I've been doing this 20 years, funded billions of dollars loans, helped over 5,000 clients. So if I can help you, please reach out. I do videos like this, I do content like this because I'm here to help educate you, the consumer, and take all of this craziness that's happening in the world and the government and the economy and all this stuff and dumb it down and give it to you black and white, transparency of what in the world is going on out there in our markets, in our economy. And that's why you're following us in the real estate world, because that's why you're here probably, right? You and I know by now the data tells us that the feds are typically wrong. So why does he come out and say things that haven't happened or might happen? Why don't we just let them happen? He's making hypothetical statements like, we're going to do less cuts next year. Interest rates are going to remain higher for longer. We're going to want to see inflation hit 2% because that's their target. It has to hit 2. We need the more weakening in the job market. We need the consumer to slow down. It's too good out there, right? That's what it seems. We don't want to cut rates. And folks, to me, it's about none of that stuff, because the one thing that I know, and hopefully you know by now, is what nobody talks about, is the out of control spending at the federal government level. We're going to take in $5 trillion, but spend almost $7 trillion. We're literally living off credit cards in this country to pay for things that we can't afford. There's a 1,500-page bill to try to get passed, but because Elon jumps in there, starting to use technology, I don't know if you guys know, he took the bill, chopped it up, then started posting, then started talking about all the unbelievable pork spending, if you ever heard of that, the fat of the belly, the nonsense, the BS, the stuff that you and I, that's why everybody voted to get rid of this shit. The right, the left, the center, they all know they have a spending problem. They all know they keep spending. It's out of control. So what nobody's talking about, which is really frustrating, is what about the government spending? What are we going to do there? Because nobody knows. Nobody knows how to stop spending. Nobody knows how to cut. Because it's the painful stuff. It's the stuff that nobody wants, doesn't get them reelected. It doesn't look good. It doesn't look nice. I think we're going to see a lot of announcements, a lot of cuts. I'm hoping we're going to see some of these interest rates pull back, because 6 million people that need to refi, people that need to buy homes. This is out of control. People need to refi so much commercial real estate. I mean, it's crazy. So what's crazy about the real estate market right now is that it's not crashing. Pending sales are up. They are. Yes, we're not hitting our 5 million sales a year, but it's crazy. I heard Ryan Serhant on an interview saying that the sales are up or something 40% in New York. Who's buying? They're like, there's a lot of money on the sidelines. People are buying. People are paying cash. People are financing. People have to move. Death, divorce, partner split up, marriage, kids, job relocation. 4 or 5 million people a year have to do something. That's a lot of people. And that's what keeps this economy going in the real estate economy. Home prices still remain steady. Yes, there's places like Texas or parts of Florida that have obviously seen some correction because everybody went there and it was kind of a weird thing where everybody went there and bought, and now people are trying to sell. And yeah, there's a price correction, but those markets went so high up. Do you feel bad? Okay, they went up 70%. Now they pulled back 10, 15, 20%. You're still at 50%. Nobody's crying. Nobody's whining. I get it. If you bought at the top, it sucks, but you still have tons of equity for most of the folks. So what do the experts say? The experts say, obviously, as long as we don't get, well, first of all, interest rates don't go to 8 or 10%. That's not going to help. As long as the jobs market doesn't fall off the cliff or the economy has a meltdown. But also when it comes to housing, as long as inventory doesn't go skyrocketing, home prices will remain here. You know, Ryan Serhant in the same clip even talked about how maybe this is the new world we're living in. Maybe we're just not going to see the correction everybody thinks. Maybe we're just not going to see that many home sales because the lock-in effect's real. The people are locked in the 1s, the 2s, and 3s, and 4% rates. They don't want to move. Not only locked in the rate, they're locked in the insurance, they're locked in the taxes, they're locked in the price. It's not just that, hey, I'm going to go buy something else and my rate's going to go up. No, it's that everything might go up. That house is bigger, insurance costs more, right? The house is bigger, electricity costs more. The house is bigger, the mortgage costs more. The house is bigger, taxes cost more. And it's not like, and then even if they get a decent rate, they're like, the cost is so much more. It's because I'm going to go buy a house and pay double. No, I'm not. We're just going to stay here. I'll invest my money elsewhere. I'll go buy an investment property. I'll buy money in the stock market. I'll go buy Bitcoin. There's other things people are doing that instead of sitting in this asset class of real estate are just going to go buy another house because They need to. They're sitting and waiting. It doesn't make sense. So a lot of people are going, I'm stuck in this situation. So what are some of the things you're going to be able to do and see in 2025 to get unstuck, to see the opportunities? How are we going to deal with Jerome Powell? Well, we're going to continue to watch the data. We're going to keep a very tight eye on the regulations. Are we going to see a lot more regulations ease? What that means would help building, would help grow more inventory, right? How are we going to get inventory? Are you going to use federal land? Are they going to build faster? Are we going to give tax incentives to people that are sitting on houses that are vacant or rented that would sell, right? What are we going to do? What kind of things? And then let's talk about rates. Is the spread between the 10-year and 30 years fixed? Is that going to come back down to normal? That's 75 basis points right there, right? Or is Trump going to go talk to Fannie and Freddie and say, hey, these loan level price adjustments, that means depending on the house you're buying, the credit, the down payment, all this stuff, that they have extra hits in there. Why? Because they just had them and they've been in there. And does Fannie and Freddie need to make $20 billion? No, I don't think so. So we're at the expense of the consumer, at this cost of mortgage companies who are losing money left and right, and banks, at the cost of an affordability, at the cost of a real estate market that is in a recession because we're not selling enough, is that we're going to have all these hits in there because Fannie and Freddie wants to make record profits. Does that make any sense to you? No. This is a government entity. We're here to help people. So I didn't even get to Powell buying mortgage-backed securities. Leave that out. I didn't even get to, okay, the 10-year treasury is going to drop to 385 to 4. I didn't even get there. Just the spread between the 10-year and 30-year fix. We need confidence to get that down. Also, the loan level price adjustments. Could we see some of those get revised and bring down? Why not? Do you really need to charge a client that has a 780 credit score, maybe putting 20, 30% down? Do we really need to charge them an extra quarter rate for what? To make more profit? This doesn't make sense, folks. So I can easily see a case quickly of interest rates coming down 75 basis points to 125 without a 10-year treasury coming down, without data coming in favor of low rates, without the Fed's buying mortgage-backed securities, just paying attention, just aware, just getting involved, just making things happen. So in 2025, how can you win? How can you take advantage of all this? Get pre-approved if you're a buyer. Make sure you are pre-approved. Make sure you're ready to go. Make sure you understand your numbers. If you're trying to hit a certain number, then make sure you know when you're there, you're not there. Hit all these little tactical factors to make sure you're ready to go and you have all the data information. Work with a lender that can provide all this information. The second thing you want to do as a buyer is pay attention to what's going on there. Follow somebody like me. You should be paying attention to week over week, month over month, what is going on, what target are you looking for to hit it. Pay attention to the rates, pay attention to the news, pay attention to upcoming events, pay attention to the listing and what's going on in your neighborhood. Keep in contact with your agent, keep in contact with your lender. Spend some time, get educated on what is going on, learn the terms. You can go on Instagram and learn stuff. You can go on YouTube and learn stuff. You can get on the phone and talk to your lender, right? Get on the phone and talk to your agent. Be informed, and be informed brings confidence, and confidence brings wisdom to make great decisions for you and your family. If you're a seller and then you want to sell to buy up, look, and if you're waiting for the rate, I get it. But what happens if both buyers and sellers, if rates do come down, the inventory doesn't click up? Are you going to now be dealing with all these buyers off the sidelines, which every expert thinks that you're going to be dealing with? Sure. Is it going to cause more competition? Sure. Could you pay higher for the price than today? Probably. But maybe you're not ready. Maybe you're like, I have to wait because I need rates to come down, affordability. So there's so many factors here from a buyer and a seller that you can do, but both of you should stay informed. Both of you should stay watching, pick a couple channels, pick a couple people that you like to follow. Make sure they give great information on what's going on to stay updated. And when maybe there's something that triggers you or not, give a call, give a text, read the blogs, watch the videos. And my conclusion is this. In 2025, there's always opportunities. There's always options out there for buyers and sellers. Make sure you're working with a great team. You should have a great lender. You should have a great agent. If you're planning on doing some work, get a good contractor, have a great insurance person. And then the rest, between your lender and your agent, you should be able to help you out, round out the team with an appraiser, with an inspector, or things like that. Teamwork, truly, in this business makes the dream work. So if you're working with the right agent, they'll get your offer in front of the other agent. They should be able to get it accepted with your lender and your agent working together. So teamwork makes the dream work. Stay glued to channels like this. Be informed. The more you're informed, the better you're going to make educated decisions and put you and your family in a perfect position. I appreciate you guys. Thanks for watching. Happy holidays. Happy New Year. I'm super excited for 2025. I'm super excited to see what this new administration brings, what Doge brings. I really hope interest rates will come down. I really hope we can make the government more efficient. I really hope we can cut spending, but I really hope we can just get some real transparency of what in the world's going on. Is this data we see all the time real? Get some real jobs reports and things like that. So anyways, thank you so much for watching. Appreciate your support, and we will talk soon.